Uh, Good day. Good day, good twelve learners. Today I'll be treating a question paper for 2021, November 2021, Accounting Grade 12. I'm going to solve or treat question 1, which is the statement of financial position question. Yes. Right. This is what will happen. I'll open an answer book and answer 1.1, 1.2, and 1.3. So surely this is a 55 marks question. Let's invest our time in checking the information in details or in detail, and try to revisit the video and practice practice again and again until you understand the information carefully. Now, the important part is the year end of the company, which is 30 June 2021. They are required there. The first required 1.1. They're looking for the value of the closing stock of formal suits that was omitted from the stock sheet, but they said we need to refer to information B. Now, there's the information B. The information B here, we are given that the accountant omitted the closing stock of formal suits in trading stock or balance sheet, or trading stock balance provided in the information A. Okay, it's fine. Then now we're given that they are using a FIFO to evaluate the inventory. Now we want the closing using a FIFO. So now we are having the closing units here. This is the closing units. Why? Because it's the 30 June 2021. I emphasize to that the closing or the year end of the company is 30 June 2021 there. Then okay, it's fine. There is the units quantity units on the 30 June 2021, 240 units is the closing stock. So we are looking for the value of 240 using the FIFO. So if you use the FIFO, it means the latest purchase will be the remaining inventory at the year end. So now, okay, it's fine. So when you are doing a FIFO, you need to update the table with the returns or donation or other additional information given. So update your table. How? Okay. If you check here, we are having returns. Okay, let me select. Let me take a pen. This pen is fine. Under returns here, we are having on the 25 May 2021, we are having 24 units that way. Returns. So it means the return made when? On May purchases. So now we're gonna subtract the 24 from here so that we update the table. So that when we calculate the closing stock, we don't have to calculate closing stock or on the wrong units. So now you're gonna say 230 minus 24. We're having 206. So we are having 206 units left there. So now, okay, the remaining units there, it is 206. On the what? On the 18. So it will be 206. Then what's left so that it can give us a 240? So what's left? What's left is we're gonna say 240 minus 206. Then we get 34. 34, you're gonna take it from the next purchases, which is February. So this February, this is for May. Then the May price is what? The May price is 2,850. The February is what? 2.6. Now times 2.6, this one, this is 88. This is 88, 400. Then let's check the 2.6, 206. 206 times 2,850. Then you will get 857. 581. 581 what? 100. 587. 100. You see? Then that's your closing. That's your closing stock. Now, you put the information here to say it is the 206. It is the 206 for May times what? Times by 2850 and the 34 times by 2.6. So 587 100, then is 88 400. So when you add the two, they should give you the final answer here. You add the two there, they should give you the final answer there. Then we are having 675 500. Okay, that was the closing stock for the omitted units. Now 1.2, they are looking for the correcting of the net profit. So this one, we are rectifying the income statement. We are doing the reconciliation. So this one, you always start with the incorrect profit given. Incorrect net profit before tax given. So you start here. So seeing this, the incorrect net profit before tax is this one. You're given this one. It's incorrect. So you are fixing this one. Okay. On the answer book, you are given that you need to fix what the audit fees, fix the interest, the income, rent income, and put the income tax there, and get the net profit after tax. Okay, let's go check audit fees. So in audit fees, they're saying audit fees include 123,600, which was paid in advance for the next financial year. So it means, in other words, the accountant included the income for the next year in other income. So of which is wrong. So you need to remove the next day income. Oh, no, my mistake. It's audit fees. Audit fees, okay. This thing was paid in advance. So they paid, which is audit fees is an expense, right? Audit fees is expense. Audit fees. So now we didn't receive the fees, we paid fees to the audit. So now what's happening now? This is an expense. So this expense is the expense for the next financial year. So the expense, they subtract expenses, that we subtract, ne? So they subtracted the whole audit fees amount, of which the audit fees, they are audit fees for the next financial period. So now, of which was not supposed to be taken into account as an expense for the current financial year. So how do we do? How do we rectify this? You're gonna add back the amount that was subtracted. So this is the prepaid expense, you add it back. So you're gonna add back the prepaid expense here. 123,600, 126, 123,600. Is it correct? 123,600. Okay, it's fine. So now, the interest on loan, interest on loan. Okay, you know how we get the interest on loan. Okay, so now we are given the repayments, repayment of the loan, which is 35,000 per month, including the capitalized interest. So we are looking for the interest that was capitalized. So how are we going to get this? So we're gonna take the 35,000, which is per month, which is the repayment, then we multiply by 12 and get the whole payment for the year. 35,000 times 12, then we get 420. So this is the repayment. This is the repayment. So now once we got the repayment, including the interest, now we can get the interest. How? You're gonna say the loan balance at the end, we add repayment, then we subtract the loan balance at the beginning. So you're gonna say the loan balance at the end, which is 4 million and what? 4,028,000. Add repayment, including the interest, for 20,000. Subtract the balance at the beginning, which is 4 million what? 4,175,000. 4,175,000. So it's gonna be repayment plus the balance at the end, then minus the balance at the beginning. 4,175,000. Then we get 273. So negative or positive? It should be a negative. Why? It's an expense. It's the interest expense. What we do with the expenses? Expenses you subtract. Income you add. Okay, it's fine. Now there is a rent income there. There is a rent income there. They said the rent income of 74,000 was received from a tenant uh, for the period of 1st August 2020 to 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 31 August 2021. So this has been recorded. Now this amount takes into account a reduction of 750 per month from 1st May 2021. The year end adjustment has not been made. So now Well, what we'll do, what we have to do is to write the timeline. Now, how am I going to do this? So check. I'm gonna break this thing down with the timeline. Timeline very much important. Very much important. It will help us to identify the element affected, whether we are having a liability or asset there. So now they said this 40, this 74,000, this 74,000 was received from a tenant for a period of from the period of 1st July 2020 to what? To 31 August 2021. So now what's happening? From here to here, it's 14 months if I'm not mistaken. Because yeah, it's 14 months. It's gonna be a 6 months plus 8, isn't it? So from here until here, it's 14 months if you count well. So now, okay. So this is what we'll do. This is what we'll do. This period is 14 months. Remember, we must include the income or expenses for a period of how much? How many months? 12 months. Not 14 months. Okay, it's fine. Now, they are saying we have to do what? We have to. Oh, we had an increase, or not increment, a decrease. Reduction is a decrease. So we had a reduction of 750 per month from first May. First May is gonna be here, 2021. By 750 per month. So now the rent is not equal. Since the rent is not equal, you want to, I mean, like, you can't divide the amount of 24,000 with the 14 months because the rent is unequal. So what you have to do, you need to remove the reduction. Okay, let's remove the reduction. Reduction happened from May until August. May, June, July, August. So it's what? It's 4 months. So it's gonna be 750 times 4. Now that would be 1.5 times 2, which is 3,000. So it's 3,000. So now, okay, it's fine. This is the reduction that we need to do what? We need to remove, right? So you're gonna say 74,000, you add back the reduction that they made so that the rent can be 100%. So now this is gonna be 77,000. Then after getting 27,000, you can divide this by 14. Now, because of the rent is equal, it will give you a rent per month before increase. So now you're gonna say, okay, 77,000, then divide by 14. Then you get 5,500. So this it was before what? Before reduction. So now after reduction, okay, the 2 months that are the I mean the 2 months that are in that we received in advance have a reduction. So we need to reduce this with the 750. Ne? Now you're gonna say 5,500 minus 750. Now you're gonna say, okay, minus 750 and get 4,750. 4,750. Now, this 4,750 is per month. After what? After reduction. So now we are looking for 2 months that way received in advance. So we can multiply by 2. So when you multiply by 2, you get 9,500. So the 9,500 is the income for the next financial period. So remove it from the calculation of the income or profit. So you're gonna say minus 90 is 90 what? Let's check. 90, oh, 9,500. 9,500. Now you can put the income tax there. Let's put the income tax there. Where's the information about the income tax there? Information with regard to income tax. Where is it? Okay, there is it. After taking into account the correction above, it was determined that an additional of 85,000 it is still owed to SARS in respect of the income tax. So now this is the additional owed. So this is accrued what? Should be accrued expense. So now this is only the one that is owing, the additional owing. So now in order to get the income tax, the total income tax, you're gonna take this one that is owing and add with the uh, with the provisional tax payment there on SARS income tax. Okay, you see, you're given the SARS income tax provisional tax payment of 1,200,000. So now you're gonna say the 1,200,000 and you add with what? With the additional amount owed to SARS, which is 85,250. 85,250. 1,200,000 plus 85,250. Then we get 1,285,250. 1,285,250. Income tax you subtract. Now you will get the net profit after tax now. So you'll say what? You'll say 4,918,950. You add 123,600. Then you subtract 273,000. Then you subtract 9,500. Then you subtract what? 120, 1,285,250. Then the net profit that is 3,474,800. 3,474,800. Now that you calculated this net profit after tax, you're gonna use it under what? Under the retained income. Okay, retained income, balance at the beginning, then net profit after tax. Then you're gonna put here 3,474,800. Then now we're gonna go to the repurchases. Then now you're gonna go to the the repurchases is fine. Now let's go to the repurchases and the balance at the beginning. Let's see. Okay, balance at the beginning obviously will be the 2020. Balance at the end will be 2021. So now you're not given the balance at the beginning, we're given the balance at the end. Then there is it given on the answer book. Then now let's go to information about the shares and the dividends. Shares and the dividends, shares and the dividends, shares and dividends. Okay, let me scroll down. Yes, this is the information about the shares here. There is information about the shares. With the shares and dividends, the first thing first, they are saying the 26,000 shares were repurchased on the 1st July 2020 at the run above the average. So the one that is above average is the retained amount. This is the one that we retained, is the above price above the average. So this is the price that will need to be written under the retained income, the three rand. So times by the number of shares repurchased, which is 26,000. So we're gonna say 26,000 times 3 rand. Then you'll get what? So 26,000 times 3 rand. So we'll get 78,000. Now, with regard to the dividends, they are saying the business did not pay the interim dividend during the 2021 current financial year. So now we don't have interim. So, but then they are saying a final dividend of 65 cents per share was declared. You see? So now we are going to have the ordinary dividends. We are only having the final dividends under the dividends. They didn't pay the interim. So this should be the 0.65, which is the 65 cents. So you're gonna multiply with the number of shares at the end. Why? Because of the set. This was declared on the 30th June 2021. Okay, it's fine. Now, now they are saying, now they are saying 1,800,000 shares were in issue on the 30th June 2021. So meaning this is what? This is the shares at the end. So we're gonna multiply by 1,800,000. So now let's calculate. So we're gonna have 1,170,000. 1,170,000. So this is only the dividends that we have. So it's gonna be 1,170,000, the ordinary dividends. 170,000. So now we can work backwards now. Reversal, reverse psychology to get the balance in figure of the beginning. But it's not required because it's shaded. But if it was required, you're gonna say the balance at the end 3,240,000. Then you add 1,170,000 and do what? Repurchases, you know that it's subtracted here. Then when you do the the reversal, you're gonna what? You're gonna add also 28,000. Also dividends, you know that you need to be subtracted. That's why we add when we are doing the reversal. Then we're gonna minus the net profit before tax. After tax, 3,474,800. Then here we'll have 1,013,200. 1 million. 1 million and what? 13, eh? 1,013,200. Then done with the retained income. Go into the balance sheet. The things that are shaded are not required. Yeah? So under current asset, we know that we have inventory, we have trade and other receivable, then we have cash and cash equivalent. So now, firstly, to get the marks, open bracket, open bracket, open bracket, and put the amount from there for the trial balance. Let's start with the inventory there. Let's start with the inventory from the trial balance there, which is the training stock. 4,198,500. 4,198,500. Then from there, what do? You go by the adjustment. Where is the adjustment affecting the inventory? So there's it, which is formal suits. Formal suits, this was omitted, right? This is the one that was omitted. So this one you're gonna add you're gonna add the closing. You're gonna add the closing of what? Of formal suits that we calculated at the beginning. How much was that at the beginning? At the beginning, which is the first question. You got 675,500. There is it. 675,500 plus 675,500. Now, is there any other information affecting the inventory? Let's check. Number F. Number F, they're saying GMO Ltd returned 10 ladies' coats to the supplier. So the selling price was this one. The markup is this one. So we are looking for the cost of what? Of the return. Yeah? So what we'll do, you have to get the cost price first. You're gonna say the selling price of 1,750 times by 100, then divide by 125. So we'll get the cost price 1,750 times 100, then divide by 125. So it's 1.4. So 1.4 per what? Per ladies code. So now, how many were returned? 10 times 10. So obviously this is going to be 14,000, isn't it? Times 10. Then it's going to be 14,000. So the 14,000 we returned to the supplier and was not recorded. No entry has been made. So now it will be minus 14,000 because it's returned. Returned will decrease what? The inventory. So now we are safe that we can save 4,198,500 plus 675,500 then minus 14,000. Then we are having 4,860. 4,860,23. You see? Then we are done with the inventory. Then now we can go to the trade and other receivables. Then you open bracket, you put the net trade data there, which is 3,668,810. 3,668,810. 810. Now you go get the information about the things that will go to other receivables. Uh, Firstly, it will be the prepaid expense and the accrued income. So now we are having the accrued income here, which is 8,000. Income receivable or accrued income is there, 8,000. Then you're gonna put it here, say plus 8,000. Then you go find another information with regard to the credit receivable, which is the prepaid expense if we have. But the prepaid expense we did talk about it, which is the audit fees. The audit fees that were paid in the next financial period, which is 123,600. So you're gonna put it here, 123,600. You add it here. I'm not sure if it's done. Not sure if it's done. Then what about this rent income? It was liability. Okay. So I think all is done. All is done. The only thing that is left is number E. They are talking about the data with the credit balance. Now, of 11,000 must be transferred to the creditor's ledger. So I'm gonna show you the effect now. I'm gonna show you the effect on how to balance this. So now it's a T account like this. It's a data. Oh, a data with the credit balance in the space. It's a data. Then it's a creditor. Now they are saying data with credit balance 11,000. With credit, data with credit balance of 11,000 must be transferred to the creditor's ledger. So now what do you need to know? A data is an asset, increase on the debit side, decrease on the credit side. So now also the creditor increase on the credit side, decrease on the debit side. So now when they say we need to transfer this amount, so it will cancel in this account. It will cancel on the opposite side, which is 11,000. Then after that, you apply a double entry, double entry, double entry. This will come to the credit side of this one. Then 11,000. Then from there, you check the effect. What's the effect here? It's plus here. Then it's plus here. So it means it's gonna be a plus under what? Under the note, both sides. So it will be plus 11,000. Then also under the trade payables, it will be trade payables. It will be 11,000 positive. So now I think all is done under the trade and other receivables. Now we can calculate. We are having 3,668, 810, then plus 8,000 plus 123,600 plus 11,000. So it's 3 million 811 what 410. Now we can go to the cash and cash equivalent. Cash and cash equivalent, what's happening with the cash and cash equivalent? Let's come there on the trial balance. Then we are having a bank with the overdraft, which is the balancing figure there. Then the petty cash and the cash flow is the balancing figure there. Okay, so these are the balancing figure. So now we are having the total here. So in order to get the cash and cash equivalent, we can see current asset of 8,700,000, then minus the 2, minus 4,863,000, and minus 3,811,410. So now, so we're gonna say 8,700,000 minus 4,860 minus 3,811,410. So we are having 28,590. Then the first part, which is done, total, the current asset is done. Now, let's go get the shareholders equity. So the shareholders equity, we are given the retained income. So here we're gonna say ordinary share capital. So for ordinary share capital, let's see how we're gonna get this. Let's go and get information about the shares. So there were no additional shares as stipulated. It's fine. But we are having the shares at the end there. Yeah, we are having the shares at the end there. And we are given the NAV. A simple thing, we're gonna use the NAV. So the NAV formula to get the shareholders equity. So now what we can do, we need to go to the formula of the NAV. NAV, the net asset value, is equal to the shareholders equity divided by number of shares at the end. So now the NAV is given there. Let's substitute. The NAV is given 540 cents. So what is 540 cents? 540, 5 rand foot. 540 cents is 5 rand foot. 540 divided by 100. Yeah, that's 5 rand 40 cents. 5.4. Then show us for equity, we don't have it. But the number of shares we have them, which is 1,800,000. Which is 1,800,000 there. There's it. So now we can cross multiple. This times this times this. So it means the shareholders equity, it can be what? The 5 rand 40 cent times by 1,800,000 shares. Now you can say 5 Rand 40 times 1,800,000. So you're getting 9,720,000. So 9,720,000 is the shareholders equity. Now you put it here, 9,720,000. Then now the difference it will give you what? Ordinary share capital. So now minus 3,240,000. Then you get 6,480,000. Or you can get the ordinary share capital by the average price. By the average price. Because there's no additional shares. How maybe the average price was how much there? I think the average price there was somewhere a price above average. It's 3 Rand. So now you can get the average price. So you can say the 3 times 100. Oh, we don't have the. Yeah, we don't have the percentage of this amount. So yeah, I think that is how we get it. Now let's go to the non-current liability. The non-current liability, you are having a long-term loan. Open bracket, put the amount there from the trial balance, the loan from the trial balance, which is 3,755,000. 3,755,000. I think the interest is capitalized there. Interest is capitalized. So if the interest is capitalized, it will be part of the long-term loan. So you're gonna add the interest here. So the interest, we know how did you get the interest? I think the interest we did calculate it. I think under the yeah, there's it. The interest on loan. 273. So we got the 273. So the 273 need to be populated here. 23. Then minus the current portion of loan. So the current portion of loan, let's find the current portion of loan. There is an information there about the repayment, a monthly repayment. They're saying the fixed monthly installment of 35,000 to cover the loan payment and the interest. It has to be paid over the full period of the loan. Now the interest will decline over the life of the loan. The interest on loan budgeted for the next financial year, which is the 294. So now, so the current portion of loan always is like this. So the current portion of loan. Okay, let me use a different pen. It's always repayment minus interest. Interest for the next for the next financial period. So what is the repayment? So the repayment is 35,000, but it's per month. This one is a monthly payment. So we don't want the monthly pay. We need the repayment for the whole year, which is 35,000 times 12, which is 420,000. Then minus interest for the next financial period, which is this one, is 234,000. So now from there you will get the current portion of loan. So 420,000 minus 234,000 is 186. So 186 is the current portion of loan. So minus 186,000. Why do we minus it here? This will be payable in the next financial period. So within the 12 months, something within the 12 months, now it's current. It should be the current liability. Something more than 12 months is a long-term liability. So since we are going to pay this in the next financial period, then now it meets the definition of a current liability. So now we record it twice, ne? So it's current portion of loan under the current liability now. So we're gonna say 1,000,000 on 186,000. So now we can conclude the long-term loan to say 3,755,000 plus 273,000, then minus 186,000. We're having 3,000,042. 3,842. 3,842,000. Then 3,842,000. Now we are having the SARS income tax. And then we are having shareholders for dividends. So the two are given. So the SARS income tax is given. They said is the one that is owed. If I can still remember, is this one. The 85,000 is still owed. 85,250. So we're gonna say 85,250. The shareholders for dividends is the final dividend of the current financial year. We did calculate this. Under the retained income, we got 1,170,000. So we got 1,170,000, 1,170,000. So it's 1,170,000. Now, what's happening now? Now we can, obviously the bank overdraft is the balancing figure. Let's finalize the trade payable. So the trade payable, we only included the transfer. So now let's get the trade creditors or creditors control. Creditors control, gonna edit here. Creditors control, gonna edit here. 1,253,000. Now 1,253,000. Then there was a rent income that was received in advance. We did calculate the rent in advance for 2 months. So no need to recalculate, just copy the amount. 9,500 is for the next financial period. So 9,500. Now, is there accrued expense? Is there accrued expense there? There accrued expense there. So now it means this is done. It means this is done. Now we can say, now we can say 11,000 plus 1,253,000 plus 9,500. Then it's 1,273,000. 1,273,500. So we don't have bank overdraft there. It is the balancing figure. Then let's check the financial indicator that we're given. I don't think we're given one financial indicator. Okay, we're given the acid test ratio. So with the acid test ratio, uh, bona ke sa feleletša video mo 5 minutes your phone. So now with regard to the acid test ratio, the acid test ratio, you're gonna do it like this now. Let's write the formula. Acid test ratio is equals to the current assets minus inventory is to current liability. So the acid test ratio there, let's substitute. Acid test ratio there is given. It's given as how much there? It's 1.2. Yeah, it's 1.2 there. There is 1.2. 1,2. 1,2. Then here you're gonna say 1,2 is equals to current asset. Where's the current asset? Current asset is given under the is given there. It's 8,700,000. So 8,700,000. So minus inventory. Where's the inventory? The inventory calculated it today. 4,860,000. So 4,860,000. So the is true. The is true. This is true. Is dividing. It's a division. So we divide by current and liability. So now you can assume is 1. So now we can cross multiple. Cross multiple. So it is this part times 1. It will be this part, 8,700,000 minus 4,860,000 is equals to what? 1,2 times current liability. It will be 1,2 current liability. Now from there we can divide both sides by what? By 1,2. 1,2 so that we can get the current liabilities. So now let's calculate. Okay, this again, this will cancel this. So now let's calculate. I will have calculator. 8,700,000 and minus 4,860,000. Then and divide this by 1,2. So I get in 3,200,000. So it means the current liability is close to 3,200,000. Now we got the current liability now. Now it's 3,200,000.